GetCrack. Wake up, motherfucker.
Okay, hello. What's up? What's up, guys? January 18th, 2026. Okay, so let's go over what's up for today. Anything interesting happened today? I don't think so. Nothing interesting, like I said. So, with my short update, about 1.5 days ago, I think, late at night or early in the morning, depending on where you live, I said, whatever, nothing's gonna happen today, probably. Okay, so let's go into it. Boop, boop, take away the banner. All right, let's go and have a little background music. Okay, come on. Definitely gonna have to. Okay, use this one. Let's use this one. Okay, so let's look at that first. So what has it been doing here? Look at that. See? It went right into that yellow area again. And it's trying to bounce off of it. Now, will it survive? Or will we crack and go all the way down to back to 60,000? Or even touch 50,000? If it does, then I would recommend you go long. Because you can make a quick trade. Everybody's going to get super bearish. I'm betting that because we had a lot of volume come in to stop this bleeding here, that someone will try to catch it down there, support it again, get back into the pink area, will remain in the pink area for a little while longer, and something will happen probably to push it up back to 80. And once we get back up to 80, we'll decide then if we want, because once we hit 80, then the next leg down will probably be very steep, very scary, and very delicious to short. Who knows? Go down to 40, 30,000, maybe even 20,000. Okay, that's the targets if it fails. Now, if it holds 80, somehow acts very differently than what I expect, then maybe it's over. Maybe there'll be a recovery in May when, the new Fed chair will come in, probably stop the bleeding, because I'm guessing there's going to be something with the NASDAQ, make things go back down, people will panic, the new Fed chair will come in, Trump will tell the new Fed chair to rescue the markets, and everything will get rescued all together. Okay, let me give you this, because I think this has been floating around Twitter. People have been noticing there was a high correlation. Okay, so correlation here between Bitcoin and something else we've been discussing for a while now. Come on. Stop trying to drain my memory. StreamYards. Okay. So let me show you this. So the orange line is Bitcoin. The purple line is software. IGV, the ETF I keep harping on. I keep saying, look at IGV, look at all this software, look at all the AI software. IGV has a lot of stocks which primarily need AI to be efficient right now to compete. And if they don't show growth with lower costs, to do the same amount of work, they're going to get punished in earnings season. So far in earnings, we've been punished, right? Palantir is one of them. And what have I been telling you guys to try to look at as potential shorts? For Bitcoin, I say use MSTR, short that thing. For software, I've been primarily saying Palantir probably looks like it wants to go back down after it cracks, 120 something. And after that, it'll go back down to 60. So would you short here? Well, first it has to prove that it can break these lows, right? I'm guessing that way too many people think they want to short. right now. On the other hand, I have been seeing reports that a lot of retail have been buying down here. So typically, retail is not the smartest crowd to like rely on. But on the other hand, they did do a good job in April because they did buy a lot in April, betting against Trump, betting against like tariffs will stick, and that was right. Now, are they going to be right again? Interesting. I think we'll have to see. But shorting down here requires a lot of confidence that something big will break it down, right? Something big. Now, there's been a lot of chatter recently about Iran, about Trump. There's also bets that this Friday the Supreme Court might rule on Trump's tariffs. I think I've already read articles saying that like it doesn't matter now whether it's they block the tariffs or not, because I think the market already is discounting that, right? The market has kind of already said, well, we just don't think Trump sticks to his guns. The tariff stuff is just negotiation tactics, and most of the tariffs have been already implemented. To roll it back would require a lot more work. So the market kind of already priced everything in. However, if let's say the news comes out that the Supreme Court is blocking tariffs, then we could see a pump, right? And that pump is probably the trap that I'm looking for. The trap that everyone's happy, right? They'll probably chase semiconductors for sure. Semiconductors already have the highest level of tariffs, 200% on China. And the trade deals and all the export licensing and export, what they call that? It's not a sanction, but we can't export certain chips to China and all that. That's not going to be blocked. I don't know how much that'll have any effect, but people chase news a lot of times, even if it's warranted or not. And so the news could get some relief. People might be chasing things. So if the semiconductors break out, then why not? I'll definitely chase that. So if you look at the bottom here, this is the correlation. So when it's 1, that means it's highly correlated. When it's negative, it's going the opposite, right? So right now we're back at the highest correlation of 1. Okay, so it's highly correlated together. I guess the same kind of money that chases crypto via Bitcoin and AI stocks are probably the same type of people, the people that like to chase hype, that like to chase news. So you could probably bet that any kind of good news or quote unquote good news will easily squeeze any shorts down here. Anybody that's greedy enough to short down here without confirmation will get blown out. Any hedging that's going on here will get blown out. So all this will add fuel to the fire, and you will see a nice rally up. Okay, so that's a good trade. Doesn't mean I'm gonna be bullish on this thing until May, but for now, you could easily make some money before the new Fed chair comes in. Okay, so that's all I want to mention about that. Okay, let's see. Do we want to talk about some of the Iran stuff or no? Okay, let's do one article. Before we continue. So this is the main article that was released yesterday. So it's from Axios. Trump moves closer to a major war with Iran. The Trump administration is closer to a major war with the Middle East than most Americans realize. It could begin very soon. A U.S. military operation in Iran would likely be a massive, weeks-long campaign that would look more like full-fledged war than last month's pinpoint operation in Venezuela, sources say. The sources noted it would likely be a joint U.S.-Israeli campaign that's much broader in scope and more existential for the regime than the Israeli-led 12-day war last June, which the U.S. eventually joined to take out Iran's underground nuclear facilities. Such a war would have a dramatic influence on the entire region. and major implications for the remaining 3 years of the Trump presidency. With the attention of Congress and the public otherwise occupied, there is little public debate about what could be the most consequential U.S. military intervention in the Middle East in at least a decade. Trump came close to striking Iran in early January over the killing of thousands of protesters by the regime, but when the window of opportunity passed, the administration shifted into a two-track approach: nuclear talks paired with a massive military buildup. By delaying and bringing so much force to bear, Trump has raised expectations for what an operation will look like if a deal can't be reached. And right now, a deal does not look likely. Trump's advisors Jared Kushner and Steve Witkoff met with Iran's Foreign Minister Abbas Araghchi for 3 hours in Geneva on Tuesday. While both sides said the talks made progress, the gaps are wide, and U.S. officials aren't optimistic about closing them. Vice President Vance told Fox News the talks went well in some ways, but in other ways, it was very clear that the president has set some red lines that the Iranians are not yet willing to actually acknowledge and work through. Vance made it clear that while Trump wants a deal, he could determine that diplomacy has reached its natural end. Trump's armada has grown to include 2 aircraft carriers, a dozen warships, hundreds of fighter jets, and multiple air defense systems. Some of that firepower is still on its way. More than 150 U.S. military cargo flights have moved weapon systems and ammunition to the Middle East. Just in the past 24 hours, another 50 fighter jets, F-35s, F-22s, F-16s headed to the region. The standoff with Iran has gone on so long that many Americans are likely numb to it. War could come sooner and be much bigger than most recognize, sources say. Trump's military and rhetorical buildups make it hard for him to back down without major concessions from Iran on its nuclear program. It's not in Trump's nature, and his advisors don't view the deployment of all that hardware as a bluff. With Trump, anything can happen, but all signs point to him pulling the trigger if talks fail. Okay, so this is where we're at. And I think you guys need to understand Kushner, okay? And also the Epstein files, because people have been talking about this since yesterday. The Epstein whistleblower who was silenced. A former Deutsche Bank compliance officer told the FBI she was fired in 2018 after flagging suspicious activity in accounts linked to Jeffrey Epstein and Jared Kushner, offering yet another example of how they operate above the law. A former compliance officer for the international financial powerhouse Deutsche Bank told the Federal Bureau of Investigation she was fired in 2018 after raising concerns about suspicious banking activity from accounts owned by financier and sex predator Jeffrey Epstein, as well as accounts linked to Jared Kushner, President Donald Trump's son-in-law, advisor, and business partner. The allegations come from an FBI interview report, including in the Justice Department's latest release of Epstein-related documents. The former anti-money laundering official detailed mind-boggling cryptocurrency transactions between Kushner's company and a Russian individual. She also claimed that she was punished after raising concerns about more than 100 politically connected individuals who had been shielded from typical anti-money laundering services. Okay, so I think you can read the rest of this yourself. Blah, 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 blah. I don't think it matters here. I don't think they'll go anything of relevance. Okay, they'll just keep talking about the accounting irregularities. Okay, with Kushner and all that. All we need to know is Kushner is a key Israeli operative. Everybody knows this. So that's what we need to do. That's what we need to know. That's all we got to know, because guess what? Israel is building out its defense systems. New U.S. venture fund bets big on Israel, promising millions for fledgling startups. Okay, this was written January 5th. U.S.-based venture fund Stryker Venture Partners, which recently raised $165 million, announced on Monday that it is entering the Israeli market to bet on the next generation of AI and cybersecurity startups in the country. San Francisco-based Stryker said the fresh capital will be invested into 10 young startups, 5 of which will be in Israel. The fund is looking to cut checks ranging from $5 million to $30 million each for young early-stage startups in the areas of cybersecurity and AI, which have been getting the lion's share of investor attention lately. Stryker was founded late last year by veteran investor Max Gazor, a former senior partner at U.S. venture capital CRV. Blah, 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 blah. Okay, anything else? No, nothing, I don't think. Foreign investors maintained their dominant role in Israeli tech ecosystem last year, accounting for 60% of total investors, led by prominent U.S. funds, including Insight Partners, Bessemer Venture Partners, Anderson Horowitz, A16Z, and Blackstone, according to data compiled by Startup Nation Central. Stryker said it has nabbed commitments for the $165 million fund from 10 leading institutional entities in the U.S. Unlike most U.S. funds, Stryker will partner with companies at the earliest stage of inception to back founders with a relatively large capital injection and help them with team building and initial idea formation. Blah, 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 blah. Okay, that's it. And then we have this. And tie it all the way back. Backed by Trump's son, Israeli-founded AI drone startup plans to go public on the NASDAQ. There we go, baby. Xtend, Xtend, an Israeli developer of a human-guided AI drone operating system, announced plans Tuesday to merge with U.S. firm JFB Construction Holdings as part of a deal to go public on the NASDAQ at a company valuation of $1.5 billion. God damn. So this was written February 17th, yesterday. The merger deal is backed by $152 million in funds raised from strategic investors, including Eric Trump, the son of U.S. President Donald Trump, Israel's Protego Ventures, Florida-based drone maker Unusual Machines, Texas-based real estate development firm American Ventures LLC, and Miami-based Aliyah Capital. Oh, yeah. All familiar names for anybody in the know. That's it, baby. Upon completion of an all-stock merger transaction with Florida-based real estate development and construction firm JFB, expected in mid-2026, the joint company will be renamed Xtend AI Robotics and be listed on the NASDAQ exchange under the ticker XTND. There you go. All right, you can read the rest of that yourself. I think, we got something interesting here. It'll be headquartered in Tampa, Florida. Whoa, what a surprise. What a shock. What a shock. Of course it's in Florida. Anyhow. Yeah, of course. Bye. All right, man. Well, so why did I go through all that? Because the future is in AI spending for sure. Now, which stocks will benefit the most, right? Semiconductors benefited last year. Software is a different matter because software is kind of like the end customer in a way. Palantir kind of plays it off, kind of like, oh, we have proprietary AI systems, so we're not just software, we provide a service. So that's kind of smart. Palantir kind of buffers themselves in that sense. If you buy Palantir systems, you require servicing from them. Like, you need to talk to their representatives, talk to their support teams. So you always have a contract with them to support you using their software because they keep it proprietary. Other people, however, it's sort of like, well, we have software and we say we put AI in it, but that's kind of like a matter of degrees. Some people might just put like, okay, well, we put like an image generator in a Word doc, right? Or something stupid like that. Is Microsoft really an AI company? Well, until very recently they weren't. Only until they kind of like was funding OpenAI and started stealing some of their engineers, and then say like, well, we're kind of just we're sort of incorporating a lot of OpenAI stuff into our things, see. But Palantir is kind of like, yeah, they were always the first to say, like, yeah, we offer you something special. Even before they had talked up their AI qualifications, they were always like, yeah, we integrate things. We have the data, we got the AI, we got all the stuff you need, right? Data is more important, actually. That's what the Oracle CEO told you, and I mentioned that some time ago. What data sets do you have? If you have proprietary data that other people don't have to train their AI, and all that's jazz, what they call that, inference. So, it's very different. Now, when you look at semiconductors, it doesn't matter. NVIDIA doesn't care who their customer is, right? They sell the chips to the big data centers. It doesn't matter. They need the chips for sure. And then now we're seeing a top in that, because now people are looking at, well, it's memory. Memory is more important now, because they just need to have as much memory as possible. They already have the GPUs. We need to suck up all the memory now. And then eventually the memory will top out, right? They won't need to order any more memory. So then what's the next thing? Oh, we need more nuclear power plants to power all these things. See, we'll keep going down the line. We also talked about like all the optical fibers. So those glass, optical fiber, cabling companies went up too. So that's why you want to look at industrial sector. You want to look at materials, copper, utility companies. Okay, so I'm going through another list. All right, we need to go and look through another list and find other stocks to look at. Okay, we have some defense companies, energy companies too that we'll have to look at. But for now, let's just look at how things are with some of these industrial types. Oh, we also will need to look at construction too. They'll need to construct more data centers. So same thing with real estate. We'll also have a lot of people needing to work. So every time they build a new campus, they'll have to build more housing. So workers will have to be there to maintain these data centers. That will also be in the mix. So if they build out more of these towns and cities up and upgrade their infrastructure, you'll definitely see that. So we'll have to look at that. So I have a list of stocks here. We're going to have to look at them one by one eventually, see what we add to the list, make our boomer portfolio, get ready for a crash sometime down the line in the markets. And once it does, then we start adding out. Otherwise, all I'm going to tell you to do is buy oil U. That's it, because oil is definitely going to rise, especially if any of these events happen, if there's a war kicking up here. But for now, yeah, we're going to have to look one by one and see where we want to be. We've got natural gas coming up here. Natural gas, you see this one here? Liquefied natural gas. It kind of suffered from October going into the new year, and then this new year we've been recovering, so something to look at. We have lots of things, and of course there's some defense companies that have been doing well, still doing well. Raytheon and Lockheed, probably the best performing large cap defense companies. If that holds, like right now, these defense companies don't outperform semiconductors, so that's why I don't bother talking about them. I don't want to waste my time putting money into these stocks if semiconductors have still been like the leader, right? I want to see who's the new leader. One of the potentials has been the oil and gas companies. The next one are the defense companies. So oil U, there's also a 3x leverage ETF called DFEN, DFEN. Right now, it's kind of like, it's not really outperforming, semiconductors, but it might outperform later on as we get into the war and all that. So we have lots of things to cover in that area. But home construction, yeah, I'm looking at that. I might jump back in. Last time I was in this nail stuff was like 2024. After that, it was kind of like just going sideways. It's really not something that outperforms semiconductors. So let's see, 2022, and then it made its bounce at 2023. Yeah, somewhere here. So 2024-ish, you kind of had like this last move up in the summer up here. So I'm gonna have to see if this is really gonna go up, and especially when the interest rates start going down and a lot of people will start buying houses again, this will definitely start picking up. And Congress also recently changed the regulations for how to build houses to make it easier to build more and more houses fast. So a lot of cheap houses, and these companies build massive amounts of suburbs really quickly. So a lot of McMansions, a lot of apartment buildings, everything's of that sort. And if it is easier to build, these companies will benefit from lower interest rates. Many people buy loans. They themselves, these builders will get loans to take care of the upfront costs, and they'll massively build everywhere. So yes, these are potential places to go into. And even though they don't say AI in the stock, they benefit from the AI build out because we're spending a lot of money in infrastructure. So that's what it is. All right, good. Finished that. So hopefully you get the idea with that. So back to Bitcoin here. So this is the mark. We're on the third count here. Let me see, 240. Let me see how this goes for the 240. Yeah, it's just been going sideways. It has been having trouble getting over this Ichimoku cloud. It's bouncing off 66. All right. But as you can see, there's no trend. There's a 9 count going down, 9 count reversing it. Looks like we might be making a 9 count going down. If this breaks here, I think it should easily fall back to 60 and lower very fast. And that's where I would get long. I would prepare to get a long, make a quick trade from there. So you can go to MSTR and look at MSTRX or something like that. Let me see. MSTR and go long there. You can do 2x. You can go 2x leverage long on that if you want. As far as the software is concerned, let's come there when we get there, but it's already beaten up pretty badly. Let's look at the weekly. Let's look at the IGV. If this thing does well, then I might just go long Palantir, but you see this? So let's say it does a 9 count next week. All right, let's say it flushes down with Bitcoin, right? This thing goes down, and I'll be looking for maybe a long on Palantir. Maybe I'll just go long on Palantir then. I don't believe the shorts can make it down. Okay. What will probably happen is there's going to be a large threat of war, and then all of a sudden maybe we'll have a week of war, right? Everybody's freaking out, and then all of a sudden they'll be like, no, okay, we'll have peace now. And it'll end faster than what people expect, and then it'll bounce back up or some shit. I don't know, something like that, maybe. But anything could happen. So Walmart will have earnings on Thursday, and we'll have inflation reports before the open at 8:30 on Friday. So after the close, we'll have Walmart. That'll spill over into Friday morning with inflation. And if the Supreme Court does decide on tariffs, then that will happen probably midday. I don't know when they release it, honestly, the Supreme Court. I think it's usually in the morning, but Eastern time. So maybe by 10 a.m., but who knows? Maybe it'll last till noon Eastern. Yeah, we'll see. Okay. All right. Now, let me talk about something from the past that I've already explained. If you want to know if something really is going to crash, okay, this is one signal I discovered a while back, because I found this chart that was made by somebody, and somebody posted it somewhere, and I grabbed it. And it's an interesting way of measuring how somebody is stopping, is slowly trying to get out. Okay, so this signal is very slow. If you look at this is called margin statistics. What is margin? Margin is a loan from your broker. So one way to get leverage, most people know which is to use options. The traditional way is to just get a loan from your bank. So you get a margin account. Depending on the size of your margin, it could be very large. And you've heard margin before. I mean, if you watch that movie, Margin Call, right? Margin Call. So what happened there was that the people that were buying mortgage-backed securities got rug pulled because everybody was saying, hey, yo, we're not giving you a loan anymore, okay? We're taking away your margin. So if you buy on margin, meaning that you are buying with money that you do not have, you are basically borrowing money from the broker to buy something, then there is something called margin maintenance. At a certain point, they can take it away from you, okay? That point is when you start losing money. That's one way. Like your stock starts dropping, you bought your stock in margin, right? So you used your borrowed money to buy some stock. Let's say you bought Apple or something, and Apple started dropping lower than the required maintenance for that margin. The bank will call you up and say, buddy, your Apple stock is dropping. And you are now below the limit that we can tolerate giving you this loan. We are going to force you to sell, or we will sell for you that stock. So most people these days, because the stock market goes up and up and up all the time, everybody's like, buy the dip, buy the dip, buy the dip. They are in that relaxed mentality that everyone will get saved and every dip will go back up. They get a lot of margin. So this is the margin statistics. When the market is very happy, this thing goes up. Right now, as of December, we have, I think this is shown in millions. So this would be, okay, let's see, millions. So this would be trillions then, right? Billions then, right? Or something. Let me see. That's billions. So is that trillions? God damn, is that trillions, man? Man, that's a lot, huh? Shit, I haven't looked at this in a while. Holy fuck. Yeah, that's a lot of freaking money. So this thing combines all the U.S. brokerage accounts that have margin, and they basically look at how many people are taking out loans to buy stocks, and this amount has been growing. Now, if we look back here, all right. So I'm sorry for the fuzziness here. Whoever saved this image did it at a low resolution, so I did the best I could here. So let me read it for you. Falling margin debt growth from high levels triggers a sell. So if you look at the second part, you see margin is going up. So usually it goes up, right? Now, down here at the bottom, this red plot here is the 15-month rate of change. So if somebody decides to reduce their margin, okay, you wouldn't notice it from this plot unless you do like a derivative. So this is kind of like a derivative. I do a rate of change. All right. So if you know calculus, velocity is the speed, right, at which you change position. Acceleration is the change of the speed. So that's like derivatives. Okay. So velocity is a derivative of position, and acceleration is the derivative of speed. So this thing is measuring this rate of change at which this margin debt is going up or going down. Okay. Now, usually we're going up, but if it starts slowly going up, like it's not going up as fast as it usually does, then you'll start seeing this red line start going down. So when you have a lot of bullishness and there's a lot of bubble going on, right? So you see here in COVID, when everybody wanted to buy more and more stocks, because Jerome Powell said, yo, we're going to turn on the printer. Then everybody was like, oh shit, let's get loans from the brokerage account and buy more stocks. So with whatever money we had. So, you know, they could get money from the government, from the Treasury Department by saying, hey, give me a PPP loan, right? That's one way. I make a LLC. I need to get my PPP loan. And, you know, a lot of people cheated, right? They didn't use that to protect their employees. They bought a yacht. They bought more condos. They did whatever the hell they wanted with that money. They didn't catch any of those fraudsters way later. And I'm sure there's a lot of people that got away with it that never got caught. And they probably used some of that money to buy stocks. Okay, that's one way to get your margin. But the traditional way is to go to your broker, go to your Fidelity, your TD Ameritrade, you know, your whatever brokerage you use, you know, Robinhood, and you go tell them, hey, give me a margin account, man, and load it up, give me 50 G's. I don't care what interest rate it is. And at that time, the interest rates were very low, right? Because Jerome Powell set the interest rate effectively at 0% again. So the interest for those margin accounts were probably just 2-3%. Very easy to maintain. Every month, you just pay a little bit. And all you had to do was buy anything, like buy Nvidia, buy any favorite stock. You could have bought like crude oil when it was negative, and you know, that's it. Everything went up and it was easy street. Make money. You print money like crazy. Now, what happened here? It went up and then suddenly went back down. Where did it come back down? It came back down in November of 2021. This was during the time when Jerome Powell said, ooh, inflation is not transitory. Whoopsie, we made a mistake. Remember? Okay, people kind of remember the time when we had like the Omega variant or whatever, but the real problem that the market was going down was because, and it stopped going up, you know, from November into December into January, was the fact that Jerome Powell said, we're going to start raising interest rates quickly. And so people then started going, whoa. Okay, I'm not going to have this huge margin account if the interest rates are going back up. I'm getting the hell out. I'm going to start selling. So they would slowly unwind all their positions from, you know, October, November, December. And if you were using this strategy of looking for the rate of change, we're looking for the 15-month rate of change of the margin. If we look at it, it went from 64, 54. It was already dropping, right? 52, 42. So whoever made this chart says, like, when I see the margin drop below 48%, I sell. That's the criteria. That's arbitrary, I guess. I mean, you could have probably already sold in September because people were already knowing Jerome Powell screwed up and probably inflation was not going to go away. Because if you look at June here, this was the peak, okay, of that rate of change. It started dropping already. So you could see the growth, the margin accounts that people were having started growing slower and slower until it started dropping here. One in September. It went up again in October, but already it's slowing down, right? It's slowing down. People were not getting increased margin. They were trying to get out and exit their margin accounts. Now, this signal also can tell you where to buy, but the buy signal is way too late. This signal comes out very slowly. If we use FINRA gives you these reports 2 weeks late. And so if you want January's data, you got to wait a month plus another 2 weeks. It's very delayed data, so you're not going to get real time. I'm sure, like, if you work in BlackRock, Blackstone, all those companies, you have this data right away. You know exactly what people are doing. And that's proprietary data, of course. People like us don't get the data right away. You know, we get it slowly. We don't get it right away. So we don't have an edge. They keep their edge. So this is the game. Sell when 15-month rate of change falls below 48%. Buy when 15-month rate of change rises above negative 21%. The buy signal probably happened after March, which is way too late, of 2023. 2023, the bottom was already well in advance. Okay, so that signal is kind of too late for that. So yeah, the real bottom was probably around what, November, December of 2022. So by the time you want to buy in March, April, May, yeah, it's probably like you gave up probably like 20% of the bottom already. But it's okay. It's an okay signal to have in your arsenal. Crack, search mass grave gravel and get Windows Enterprise. Okay. I'll look into that. PowerShell script. Okay, cool. Alrighty. Yeah, if I get a new laptop, I don't know. I'm so lazy. I'm not gonna use this laptop much longer. I mean, it's already 7 years. It's done its service. It's worked pretty well. So it's time to move on. And I might get a desktop or something. Maybe I'll build a computer. I mean, all this AI stuff, I think it requires it. You got to do this stuff. Proprietary data, pirated e-books, and scrapped websites. There's a lot of people that still have like websites that do that. I'm sure the Discord people probably have all those websites. King TL was showing like some Discord groups that had this stuff. Discord is kind of like the IRC. I don't know if any of you guys are old enough to remember IRC. IRC is still around, but probably not as popular. All the boomers and Gen Xers that used IRC to pirate and have secret stuff that people didn't access. Like this was before dark web, right? The whole dark web stuff. Yeah. Nah, I don't think I need to. It's time to move on. 7 years is enough. I mean, it's time to get a new processor, everything. And this thing has integrated graphics. It's not worth keeping. Like the reason I got this ThinkPad was as a throwaway travel laptop because I wanted to be thin. I wanted to have good battery life, like 5 hours, on low power mode, like 3 to 4 on like normal usage. So that's why I got it. And then when I got it, then COVID happened, and I was like, well, I don't need nothing now, and I've been using it ever since. I just like everything. Yeah, so I don't know. I stopped caring about computers and shit after that. So it's mainly a throwaway laptop. Yeah, for travel. So I don't care if it gets busted or thrown out. And the other good thing about it was that it had really good resolution. So you see, I'm presenting to you from the laptop here. Like this is high res, like it's 2000 by something. And I can read text really nicely. I hate pixelated like text. It just irritates me. So I paid extra for the thing. But the problem was like it's a soldered RAM. It's soldered. So that's the only drawback of it. I can't upgrade the damn RAM. It's integrated graphics, which is like the price you pay when you want higher battery life anyway. So it was one that I was willing to take. Okay, so this article here is another indicator we want to use, and we discussed this a little bit before. It's the 80 line for the corporate bonds. Okay, so the advanced decline line. So the last time this was triggered was in 2025, just before the March to April pain. So this kind of told you there was going to be a big crash. So if these type of signals happen, then we know there's something big going to happen. Okay, so I might get back to it tonight and read this, but I might not. This is very long article, very comprehensive. Okay, so you can read it yourself in the description if I don't come back to it. But this is another thing we have to look at, because I already mentioned the Hindenburg indicator. It's been flashing. Yeah, I see it flashing. Yeah, it's going again. I don't know what that means though, because there's a lot of times they can flash and nothing really happens, or it happens and it's not really that big. But when you see something like the margin account stuff, yeah, this stuff and the 80 line of bonds. The bond market is usually a lot smarter than the stock market. So if the bond guys have something funny happen to it, then you know there's a big event happening. So that's why I kind of got nervous a little bit last week when I saw the bonds go up. You know, that was like kind of a red flag to me. I'm like, wow, why is this happening? So all the people are selling copper, silver, gold, oil, and getting into dollars, and then there's hiding out in bonds. Was that just a quick trade, or is that a signal that there's a big event about to pop off? You know, okay. The other signal we have to look at is this one. This is my own indicator. I have to look at the summation index. Right now, there's nothing really going on. I see this. The McClellan index is going up. I'm just looking for correlations with the market, see if there's like a discontinuity here. Right now, nothing yet. We're not going to trigger it yet. We triggered it back in November during that big crash, but it quickly recovered, so nothing happened. The only interesting thing you see down here is that if you look at the bullishness of staple stocks, so, you know, Dollar Tree, Dollar General, Walmart, those stocks have been doing quite, I mean, not Johnson Johnson. Johnson Johnson, yeah, kind of Johnson Johnson. Johnson Johnson is really a medical company, but it kind of is a yeah. Colgate, Palmolive. How about that one? That one's definitely a staples. And when you compare it with tech, okay, and discretionary, so Tesla, Lululemon, Apple, all that stuff down here is not really performing well. So people are hiding out in staples. Usually that's a bad thing. Very bad. That means somebody's running away. NASDAQ, however, has went back down. So definitely the NASDAQ compared to the S&P is not good. Okay. So we know that. We got the IGV. All right. So that's kind of what we have to look at. Okay. So anything else I want to talk about here? No, nothing. All right. That's good. I think that's enough. The oil U is really the trade to be, right? And I think it's been goofing off, going up and down along the, I guess, resistance area that it was for the XOP, I think. So that translates into the oil U. I think if the war starts happening, for sure we'll get a pump, and we'll have to see then if we continue on up or we take a break after the war. Usually a war will give it a little boost and then it will have to go back down again. Okay. But if you look at the XOP here, you see we've been dancing for all of last week into this week. We've been dancing. Once we broke out, right, in February, and I told you guys to buy that Monday right here at the bottom of this green candle, right? Like Sunday night. I tell you, yeah, go buy it. So if you guys actually saw me on my own channel tell you that, then you would have got in on Monday. It would have went up for you, okay, all the way up here. Well, now we're dancing here. We're waiting. This is the first time we've gotten above it, all right, since about 2024. And then before that, let's see, 2023 here. So mostly 2024, we tried to get above it in this area. But the real push was during COVID, okay, from after the elections all the way up into May of 2022. And we've been stuck on this sideways range since then. And that's good, you know, when you have a long, large sideways range like this, that means that once you break out, you're going to fly. You're going to fly pretty high, probably. It's like 206 bars. Okay, 200 bars, 1400 days. So just like silver, you know, those guys who were looking at silver, they were bored out of their minds. Silver went nowhere since COVID. COVID, you had this pump, right? And then you went flat, pretty much flat, all the way until, and even here, when it started perking up a bit, 2024, you see it was still kind of flattish. You know, not really going far from where COVID was. And then all of a sudden, it broke out, in May of 2025. And it kept going, and it kept going, and it kept going, and it kept going more and more and more and more and more. So hopefully oil will do the same for us. All right. Silver had its day, gold had its day. Now it's oil's turn. And once oil is done, then we can move on to something else. All right. Something else. But for now, oil is the game plan for this year. I think oil will do this. Yeah. Oil will do this into 2027. I think it will be a long one. This will be a pretty long one, probably, depending on the wars and all the conflicts. And it's all about commodities. Everyone's trying to control as many commodities as possible because you need a lot of this stuff to build chips, right? Have energy distribution, construct homes, all sorts of stuff. So, yeah. Do you think everything is in the virtual world? Come on, guys. I'm communicating to you through a cloud of computers. These computers actually require land, water, metals. Yeah. I mean, you got no choice, man. That's why when I tell you to buy, you got to buy that moment. Otherwise, if you don't buy it at that time, you're kind of like you buy at a suboptimal level because you're buying at the point where it has a resistance. Okay, like you bought when it broke out, so it's gonna test. It's gonna test before it really flies up. That's the problem. You want to buy as it's going into that line, and that's when you have like a nice cushion. If you don't do that, you wait for the time when it breaks out, you might get trapped because it could reverse and go back down and crash, right? I don't think it's going to do that, but that's why most people who trade that way, they wait for the breakout, they get fooled. It's just like the people who short Palantir at the bottom. Like I was telling you guys to short Palantir for a week over, right? Like around here. And by the time it goes down and you want to go short it here, that's stupid because this could be a trap. It could be like it goes down, it goes beneath this red line, and then all of a sudden it shoots back up and you get burnt. So that's why when people tell you, oh, death cross, ooh, this and that doesn't work. That's too late. You gotta look at the areas where it gives you signals. Look at the semiconductors. When I did that short on semiconductors, it was because I had a reason to. If you just look at this weekly chart, it's bullish. There's no reason to short this. But I took a chance to short it because there was a potential, right? Because I saw this, right? If you look here, let's look at the 78-minute chart. I said this, right? Look, it made a new high. You had this red candle in the first hour. You made a recovery. Then you started going down. You're starting to get more and more volume. Come in. This red candle here was when I shorted because it's like you go down, you go up, you put a lot of effort into it, and the result was you start going right back down easy. And it's like, okay, short here. You go down here and I get out. I get out because it's like, what? It was Wednesday and there was something that happened Wednesday. I think there was like going to be earnings after. And also there was another reason too, that I didn't want to keep it. It's because of this. If you look at the daily chart, you see the moving averages. It's like, okay, you go through the first one, right? The 18-day moving average. You are now touching the 40. Usually when you touch the 40, you're probably going to try to make a recovery. And if you look at the next day, you see this candle, this green candle. It's like, well, that probably tells me that somebody's been buying. And then the next day you gap up and you go back up. And it's a violent move up, you see. That's why you can't really take a short on semiconductors seriously until it breaks more things. This candle here, all right, you see this? It made an attempt up here and it went back down. Now, we got to see some follow through. This isn't enough. Okay, this isn't enough. This dancing here is not enough. Because this move here was the first attempt going up above and going back into the yellow. This is like probably going to be the third time because you see on Tuesday we went into the yellow and we recovered quickly. So the next time we go into the yellow, you want to see something very, very violent, very violent. Like this time around, you see it go up above in the blue. Okay, jump up, go up, go up. Maybe it can even go up to 400, trap more people. It traps a bunch of people up here, and then it falls back, and all of a sudden, the next day it just falls and falls. Then I would be like, yeah, I'm gonna short. And then from that point on, around 350 SOXX, then I think it's ready to go deck down. Okay, so it has to finish this whole thing. It has to finish this whole thing. Nothing goes up and down like you know, if you turn a car, you don't turn a car like crazy, or do you? Like it's not a U-turn, okay? It's not like you can just go like and then all of a sudden you just keep going down. No, usually it don't. The only thing that does like that is commodities. So this is why commodities is really fun for people who want to short, because if you can get a nice top on commodities, they crash really hard. You know, they crash really hard. So far, silver has been doing quite well. Yeah, so typically, when the top is in, it should just break everything. Like this thing should have just went boom, 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 boom. Every week should have been like huge red candles down. But you see this? It got stopped right there. So that's what I expected, kind of, because I was like, nah, you know, it looks like a major top, but it's probably not going to be. I'm betting it's gonna zigzag. So far it's been zigzagging, right? So we got these gold stocks here dancing. We've been dancing above this pink area pretty well. I think we're gonna have to retest 91, and this will take probably a year. I think it'll take a year to hash out this one. So I think I'll be right that everybody's gonna go into oil. They'll pretty much ignore this for a while, and then we'll continue on. Copper is probably the same thing. Yeah, copper is gonna be the same thing. Okay. Okay, any other earnings this week? Let's see. Palo Alto Networks. No. So software, you see this one? It went down. Okay, gap down here. So it's stuck. We're stuck here. Let's look at the weekly chart. Yeah, it looks pretty ugly. So this used to be a pretty good stock. Everybody was into cybersecurity, but it looks like it's going to make a top here. But I'm betting it's going to recover a bit. And then if anybody wants to short it again, it'll have to be at 180. I don't think it'll break down from here. Anything else? No, I don't think there's anything. There's a lot of like gold mining stocks to be and silver mining, but probably not going to be that interesting. So far, it's okay. Walmart will be Thursday, right? That's right. Deere, okay. So tractors, very good. Looks. I'm probably going to put that in the boomer. It did very well bouncing from October. Okay, this was a very good move, because you see the cyan line was the most important line to get. You see this? We went above the cyan line, May, and then we pulled back and we retested, and then we start going up. So the people that bought here, right, are probably got sick and tired of Deere, because it was like over a year now. It's November 2024, and then all of a sudden it goes back down. Goes back above. Oh, it goes back down. Goes above. Nah, whole year we go down. And they'd probably be like, what the fuck? It should be doing better than semiconductors. What the heck? And then we retest that line. So that's why that line is important. It got tested in 2022, 2022, 2023. Okay? Before the attempts to break out. Finally, we retest. Then we break. And then once we broke the second area of 526, then we go up. So this one is ready. Okay? So when you have this kind of line that's been tested many times over the years, it's going to get retested over and over and over again. That's the same thing that's going to happen with oil, probably. So unless there's going to be some crazy event, I'm betting it just goes up, retests, goes up, retests. But I think this is the last retests in between 142 on XOP and 171. We'll see. And that will affect your oil U. Okay? That's how it will affect it. So most people are not patient, right? and that's why they'll lose. They'll sell when it's ready to go up. And I already played you that guy who sold silver at $30 an ounce and bought it back at 100 whatever. So, you know, there are people that are morons, complete morons. They sell when it's ready to break out, and they buy back when it's already way too expensive. So like, why did you sell here? If you looked at a chart, you saw that it was just retesting. So it goes up to 35, goes back down to 30, goes back up to 35, goes back down. Why would you sell it at 32? Once you get into 32, we're about to break out. Oh my God. Anyway, all you gotta do is look at a chart, man, and draw a bunch of lines. It's really that easy. And yeah, you can see all the patterns right there in front of your face. I don't need to tell you any further. Another earnings will be open door. That might be interesting because it's very volatile stock. Maybe it's a good trade. Like if this thing crashes, let's say, let's say it crashes, okay, in the coming days, it goes back down to $1. It might be something you could buy at $1 and have a trade, because every time it gets back to 1, you see it pops up to 5. I wouldn't put a lot of money into this. I'm just saying, like, you know, this is good for a speculative trade. Like, you just can put like $1,000 in. I don't care, right? I put like something small. To me, it's $1,000. I just like, whatever. Here, put $1,000. If it turns to 5,000, okay, cool. If it turns to 11,000, hell, much better. Like here, right? I didn't know it was gonna do that, but if it dropped to below $1, it's like, why not? Like, take a stab at it. Like, something like this is a trade. Do I believe in the company? No. Just like, what do I think? Do I even know what really this company does? No, I don't care. I know it was one of those SPAC companies that got hyped up before IPO, and you see what happened, right? It's just after IPO, look at it, it just crashed. Complete trash. Klarna is kind of like that too. See, look at this. Klarna is the buy now, pay later. Buy now, pay later used to be pretty lucrative hype, but by the time it IPO'd, the hype was definitely over. So it should have IPO'd earlier, because this thing just went straight down. The only IPO that I thought did really well, you know, there was a couple, but one of them was Reddit. You see, right? So that's something you can look at. Anyhow. Okay, so there's some utility stocks, West Coast utility stocks. This one reported Portland General. Looks like it didn't do well, so I don't know what this is. Because if it could have broke out at 55, I would have bought it. But since it's doing what it's doing now, I guess not. PG&E, California. So when it went below 1490 here, I said, like, why not? Just get it. It reported earnings late last week. Do I want to buy it? Not really. It's definitely going to go back to 22 again. But will it break 22 is another matter. EIX, another California one that had the recent wildfires in Southern California. This one was a good buy at 50. It recovered to 70. I believe it reported earnings already. Yeah, so I'll see what it does, but from here. But this might not be going anywhere. It probably will just go back down. If it goes back down to 60, maybe I'll buy it again, but I'm really not too interested in these things. Utility stocks definitely will have a play. The ones that I'm looking at is CEG, you know, on the East Coast, and New England. Anywhere that's like looks like it's more feasible. So utility stocks you'll have to play around with. There's always a lot of different utility stocks. Yeah. It's starting to finally click. It's basically what I try to do, predicting Amazon prices using camel. Oh, interesting. I didn't know that. Yeah, I mean, it's all psychology, right? It's like people buy and people sell, and they adjust the prices based on where they think the price should be. And there's an equilibrium, so it's just supply demand, so it should work. It's all the same thing, yeah. So it's all similar. Yeah, so that's why I say, like, everything you see here, it's all fractal, you know. So all the stuff is like, it's always an equilibrium here. All right. Carvana is gonna report earnings. Did it report earnings already? I guess so. I'll see how it does tomorrow. It might crash. Who knows? I don't know. Maybe it'll pump again. This one's always a funny one. I think the trend is still good. Lemonade, software company, cloud company. I think it's gonna report tomorrow or something. DoorDash. I think DoorDash was up 15%. So it was up 8% before the earnings report. It reported after. So I think this is going to go up to 200 something if it lasts. This, okay, I might be curious about this one. Like, let's look at this. You see this here? I think this was the bottom of the initial IPO here, 141. Let's put it that. And then we got a top here, 251. And then let's look at this here. This was the April, March low, right? Yeah. So let's look at that. Change the color. Let me make it a dotted line here. Make it pink. Okay, so it survived that. Okay, I'll watch that. Maybe it's a good trade. Maybe it can go up back to 251 before puking again, huh? Who knows? So that's what you should be looking for when you look at charts, because even if you don't care about DoorDash, you can look at a chart and go like, well, at least I can trade it between this line and this line if it's worth buying. You know, if I see the volume come in, if I see this and that, why not? There you go. I don't need to look at financial reports or financial statements. I just follow what the market thinks. The market thinks this thing doesn't deserve to be at 251. Then if there's nobody willing to keep it at 251, guess what? It has to return to the next largest area, which was set way back when during COVID. So it doesn't have much history, right? And the history that it had in this zone was set before 2021. So you have to look at this area and go like, well, it's going to have to violently bounce between the two, because if it wants to go above 251, that's really outside of what people thought this was worth. People definitely thought it was worth way less when Jerome Powell started increasing interest rates. But we know that Jerome Powell, is getting out, is being kicked out, and then we have a new guy coming in. If the new guy says interest rates are going to go back down, lower and lower, faster and faster, guess what? Crappy stocks like DoorDash, even if you don't believe DoorDash can make any money in the future, it's all going to be replaced by AI and all this stuff. It can't compete. Well, at least for 6 months, it can at least go from 1 something to 2 something, right? And you can trade that. That's just the game. That's just how it is as a trader. I don't really care about anything else. I just look at the lines. Yeah, that's it. Yeah. Okay, that's enough education for today. I think you understand. But like, you look at the MACD here, like, it's awful. You know, let me see. Let me show you. Like this, it's awful, right? It went below 0. It's awful. So that's really not good. You see the red coming out, definitely not good. This is a weekly chart, so this is long term. But if we look at the daily, you know, there might be some improvement. We might get something here tomorrow. We might start seeing changes. If I see enough, like, ooh, look, there's a volume coming in, there's something doing something, then hey, you know, might as well. You go get an option, you know, get a call option. Be like, okay, for sometime in December or next year, January, I'll get an option, say that, hey, this thing will probably get to like 250, 280 or something. And then you just get an option and then just wait and just sit there and trade it. I don't know, something like that, right? So you know the price where it could go towards. If you give enough time, it'll happen, because you know he'll come in May. Maybe the stock market crashes into June or July, who knows? And then all of a sudden October hits and this thing starts flying to 300. You cash out, you sell your options, right? Then you're done. Right? There you go. You know the times, you know the prices, so you can set it up. And if it does crash below a certain rate, you can protect yourself, because that's the thing with options. You could set up the trade where, you know, you limit how much you lose, and then that's why people use options. See? Yeah. So if you know how to do it anyway. I don't. You have to talk to someone else. All right. Okay, anything else I got to figure out for you guys? Okay, let's do some poly market stuff. poly market. And before I get to that, let's quickly go over the Nasdaq. You see, we still are far below this rectangled area. 611, we fell back through. Thursday, we never got close back to it. Been goofing off. Really, nothing's been going on. Like when Tuesday opened, the market opened. You see, we went down a little bit below the cyan line. I bet you a lot of idiots were trying to short it down too late, because you should have been shorting up here instead of down here, and all you did was help it like kind of recover a bit. And there's no news, so why would it go any lower? There's no news for it to go back any higher. There's nothing. So we know when the news is. It's Friday. Something's gonna happen Friday, maybe. And if Friday might be nothing too, and then we'll have to wait for the weekend. And if the weekend nobody declares war on each other, then guess what? It's Nvidia next week. Nvidia is what everyone's waiting for, really. I saw people try to pump Micron. Like, what's going on here? People keep trying to pump this guy. It's like Micron and Western Digital is like these disc makers. Western Digital, oh my God, you're using Western Digital to try to keep everything up too. You're not even using SanDisk. Like SanDisk, look, SanDisk barely moved. I don't know, whatever. Man. So. Look at SPY, the SPY. You see that? Nothing. People try to push it down this green line. Didn't go nowhere. We touched this area back in January 20th, February 5th. Again, yesterday, February 17th. So I don't think anything's going to happen till Friday. There's nothing. Okay. Yeah. So that's it. That's why I said this is going to be a boring time. But it gave me time to let you review the other signals that we're going to cover sometime later on. But I don't think there's going to be a big crash, so I just gave it to you anyway, just for something to talk about today. But let's go to the poly markets. Let me set this up. Let me get what other things here? Will the Supreme Court rule? Okay. Supreme Court rules. I think nope. No, I want to read another article. Nope. Oh, maybe I'll talk about... No, I don't want to talk about that. I was thinking of talking about like the Venezuelan tankers. So I don't know if you guys heard. There was like going to be something about the Venezuelan tankers. They went over the Indian Ocean and they seized a bunch of those shadow tankers. So let me see. I think I'm gonna just like pull up the Google AI. How about that? Because Google AI, I'll just summarize it for us. We don't need to go into any articles about it. I think it's just way too long. Because this is a coordinated like move, okay, against like Iran, China, Russia, and Venezuela together all at once. I don't think anything happened with the dollar. Let's see, dollar is moving back up. Okay, so nothing interesting there. How about the yen? Yen's recovering. Okay, so dollar's recovering against the yen, and China's closed, so the market's closed. Don't care about that. I guess that's it. So we don't have anything to worry there. Nope. Okay. All right. Let's just go over the Google stuff. Let Google summarize things for us. We don't need to worry about anything else. Come on, come on. Okay, so this is the AI overview. So I just put in Venezuela, Iran, oil. Venezuela and Iran, both heavily sanctioned oil producing nations and OPEC members, have maintained a strategic long term alliance aimed at bypassing U.S. sanctions through barter agreements, technical support for refineries, and shadow shipping networks. Iran has provided crucial fuel and equipment to Venezuela, while China has become a major destination for their discounted sanctioned crude. So in 2022, Iran cooperation agreement. Okay, all right, and so what they call the Chinese teapots, independent refiners have increasingly purchased Iranian and Venezuelan oil, often at significant discounts, utilizing shadow shipping and rerouting to avoid U.S. sanctions. Iran has consistently shipped fuel and refinery repair components to Venezuela to address shortages in exchange for heavy crude, gold, and other commodities. Okay, both countries have relied on illicit shipping or dark vessels to export oil. However, increased U.S. enforcement, including the seizing of tankers, has intensified the risk for these operations. So, they've been at least 2 tankers have been on the news that they've been like capturing. U.S. Navy has been going around doing their world police stuff. Is Russian crude sanctioned, or are they mostly refined? Russian crude is sanctioned. That's why they usually go to China. Yeah, all that stuff usually go to China or India. India and China are usually the destinations. Heard the Japs are investing heavily into this. No idea about that. Rapidus, I don't know. I never heard of that one. Okay, I'll put that in my notes. Okay, let's see. What else? Trump says India will buy oil from Venezuela. That's what Reuters says. Okay, anything else in the news? Nothing. Let's look at the other one. So I said Venezuelan tankers. I asked AI. What did it say? In early 2026, the U.S. has launched an aggressive campaign, including a maritime blockade and targeted seizures against the shadow fleet of tankers transporting sanctioned oil from Venezuela. At least 7 vessels linked to this trade have been seized, and U.S. forces actively enforcing sanctions on older, often uninsured ships. So let's see, seizures and blockades. Under Operation Southern Spear, launched in December 2025, the U.S. has intercepted vessels such as the Skipper, Century's Bella 1, later Marinera, and Sophia. These tankers often operate with deactivated automatic identification systems and are part of a network moving oil to China, Russia, and Iran. Many are over 20 years old, posing significant environmental risks. The U.S. aims to control the sale of Venezuelan oil with plans for seized oil to be part of manage the company's resources. While the U.S. has seized multiple vessels, some have been returned, reflecting a complex, high-stakes game of economic warfare. So yeah, so they've been doing it recently, all over. Okay, U.S. boards second tanker in Indian Ocean after tracking it from Caribbean. There we are. So it is a war of resources, as we know. So that's it. And you know, Russian crude requires certain requirements. Iranian crude requires certain requirements. A lot of these things, you can't just like ship oil anywhere in the world. So refineries are tuned for each country's crude, right? So that's why it's not like one for one. It's not every piece of crude oil is the same as the other. There's light crude, and there's like all that what they call it sweet crude. That's the light crude. Yeah, whatever. I'm not in that petrochemical business, so you can research that yourself. That's why refineries are going to make a lot of money. You know, when the Venezuelan stuff like comes in, then the refiners will get paid a lot just to process that into everything downstream, the plastics, the diesel, right? Yeah, gasoline, everything. Yeah, your KY jelly, right? There you go. Oh, anyhow, yeah. I don't know how much. What's the percentage of your KY jelly is sanctioned by NATO and the UN or whatever the fuck. Okay, let's see what Polymarket says. Will the Supreme Court rule on Trump's tariffs by February 20th, 12%, February 25th, 37%, 31st, 72%. So not a lot of people want or believe this Friday they'll say anything about Trump's tariffs. Okay, so that's it. Anything else? Tariffs. What about tariffs? Anything else? 27% chance they'll rule in favor of Trump's tariffs. So not a lot of confidence there. Okay, what else? Blah blah blah. Tariff increases in Canada. No. Who gives a crap? Let's go look at what's trending. How about war? Khamenei out as supreme leader of Iran by March 31st. 23% chance. U.S. strikes Iran by February 28th, 31%. March 15th, 48%. Will Jesus return before 2027? 3%. 3%. Okay, there you go, 3%. Fuck, man. 40% now believe that the Iranian regime will fall before 2027. Okay, that's going up. That's been going up, huh? We jumping up 25% on that 40%. Okay. Good. What else? Anything else interesting? Well, is Israel strike Iran by February 28th, 28% chance. Okay. Anyhow, have fun with that, Polymarket. Yeah, KY jelly. You want to short KY jelly? I don't know. Which company has the KY jelly? I don't know. Is it Procter and Gamble? Is it Unilever? Do I short Unilever? It's one of those big ass multinationals, right? It could be Nestle, as far as I know. Nestle keeps buying up every little damn thing on the grocery item. It's always Nestle. It's like Nestle, Colgate, Palmolive. Never. Fuck, man. Everything is just like by one huge ass company. Can't use Polymarket in the US apparently. There's a waiting list. Yeah, it's gambling. So all that shit's like, it doesn't matter. They'll have it in US futures, I'm sure. They'll have their own Polymarket pretty soon for in the US futures market. They'll have something like that. They already tried doing that once before. Oh my God. Okay. Anything else? Nah, nothing else. I don't think so. No, I think we're good. We're good. Has it been 1 hour 30 minutes? Yeah, it's almost 1 hour 30 minutes. All right, guys. Nestle owns 75% of everything at the damn store. That's right. They do. They own everything. Fuck, man. Those Swiss. It's Swiss, right? They just own everything, man. The Swiss, dude. Everybody's worried about the small hats, but I'm always looking at the Swiss, dude. The Swiss have so many multinational companies that are headquarters there. It's just like, fuck, man. Yeah, it's Swiss. That's right. I know. I'm watching you. Everybody's busy watching the small hats, but I'm watching the Swiss, man. They got the CERN. They got everything. Astroglide. What's Astroglide? Shit, dude. Astroglide. Yeah, let's get Astroglide. Yeah, the Nazi gold. Yeah, of course, yeah. Swiss Guard, yeah, they got a lot of ties with the Catholic Vatican. They got a lot of. So it's all in there. It's all some demonic shit. Yeah. Apparently, I have like some extended family in Switzerland. I don't know. My cousin interacts with him. Like they're like So I guess I could ask, see if there's anything going out over there. Shit. Bank of Jesus. Yeah, Bank of Jesus. That's right. I mean, the first banks were Catholic, right? Like they were made by the church, right? So they were called charity. I think it was called charity. Like you donated it, and it was like a pool of money that you could get out. And it was specifically charity because like you couldn't do usury, so that was the way to get around it. Yeah. So yeah. Anyhow, I'm not gonna go into the Merovingians or something. I think we could save those type of things for the secret stream. So the secret streams I'll do will be on my channel. I can play some documentaries or copyrighted stuff over there. So yeah, just subscribe to Give Crack to me on Kick and YouTube, and we will have another quote unquote secret stream, and we can go over a lot of other things outside of just looking at charts. Okay, some philosophical things, who knows, and play some copyright clips from movies and documentaries that highlight everything. Johnson & Johnson used to own KY, but they sold it to a company called Reckitt, who owns Durex. Those cheap condoms at the gas station. Interesting. Very nice. Good to know. Oh, that Ruby. Oh man, that guy. Oh man, that guy is crazy, dude. That guy's certifiable. I heard about him before. That Wayne, whatever, dude. Yeah, he lives in Guerneville. Like if you guys know Guerneville, California is near Sebastopol, and Guerneville is also next to Bohemian Grove. So the river, the Russian River, and all that area. Wayne Lambright, and so the Guerneville, lot of interesting stuff in that area, Northern California, and yes, it's by the Bohemian Grove. So interesting place. I used to hang out there when my friend's sister, she dated a dude who lived up there, so they both lived up there and visit them from time to time. Pretty fun, chill place, you know. So, and we would always be getting high on shrooms and, you know, talk about the Masons and the Illuminati and the Owl Club. It's the Bohemian Club. The Bohemian Club headquarters is on Nob Hill in San Francisco, but the actual Bohemian Grove is like north of Guerneville, that area. Yeah, he ran for president. Well, you know, if that guy doesn't go to the Bohemian Grove, he's not invited in the Bohemian Grove, he'll never be president. Duh. Come on, man. So yeah, we could talk about that some other time, maybe. unless I get struck down somehow. But yeah, this is the last article, you know, so I'll probably read it some other time in full, but let me just do a little bit of this. The advanced decline line is considered the granddaddy of market breadth indicators. It charts the cumulative sum of daily difference between advancing and declining issues. So what this does, it just counts, like if a bond or stock went up that day, it's +1, right? So every stock that went up, you add 1. Every stock or bond that went down, you subtract 1. Very simple. And then you add it up. It accumulates. So you go to the next trading day, and you add up the next score, and you keep going up and down, right? So here's the advanced decline line of blue. And this is the one for the S&P, okay, for stocks. So if you see a divergence in the number of stocks that went up, but the S&P keeps going up, you see a difference between them like this, then you would say, like, there's a problem. There's a problem in the breath, like bad breath with a D here, BREADTH. So there's an issue here. Now let's go down. We can do this same thing with bonds. So people usually know about this in stocks, right? So one way is to look at corporate bonds, and high yield bonds are like the junk bonds. Junk bonds are the most sensitive to changes in interest rates and people's confidence in a company. So if a lot of really trashy companies that are not Apple, Microsoft, Google, right, IBM, GE, Lockheed Martin, like really garbage companies, they would be in this area. They would be high yield bonds. Okay, when they ask people to buy their bonds, so they're asking loans, they would have to pay a higher interest rate because they have a poor credit score, essentially. So these companies are just like or like I don't want to say it. You can imagine. Okay, so these let's imagine a low credit score person. What is that? Okay, that's the high yield bonds. The advanced decline line divergence system for high yield bonds issued a cautionary signal indicating that these economically sensitive corporate bonds, which correlate closely to equities, fail to validate the S&P 500's new high. So this was last year before the April stuff happened. Now, the problem with this is that you actually have to go to the data. So just like in FINRA, right? Here, I have to go to FINRA to get the data for the margin statistics. I also have to go somewhere else to get the bond data. This type of data is easy to get if you work at BlackRock, you buy a Bloomberg terminal, or you work somewhere that's really important that has this data at hand. Otherwise, you got to go around, goof around, and download these spreadsheets and derive this data yourself. So this is not. Most of this stuff that people get here are probably really stale, like really old data. Something that's like a month or 2 months old. So if you want to know if there's a crash that's happening, this is probably going to take a while. So again, I don't know. I'll have to look into this and see if I can get this data myself and generate it. So I talked about it a little bit like a year and a half ago when we did these streams. The McClellan guy talked about it, and he gave a link where you can go get the spreadsheets and do it yourself, and it's just like, fuck this is so annoying. So yeah, but if I think that there's going to be a big crash, I think I have to do it because I need to get all the signals ready. I need to know, is this going to be a 2008 type event? If it's going to be a 2008 type event, I gotta go get the data. I gotta go grab it. So let me see. Let me show you where the guy got it. Maybe one of you guys can do it for me. I don't know. McOscillator. Because if I don't think there's a crash, I'm not gonna waste my time and do this. But when I feel like there is, then yeah, it's time to do it. Probably next year, that's when I'll start thinking about worrying that there's going to be a big crash. Any crash we have now is just going to be like, it's like April. It's like whatever. It just recovers. So, see, FINRA. Yeah, I got to go back to FINRA again. Oh, man. I got to go download their stupid little spreadsheets and stuff and get it. Yeah, FINRA.org/FINRA data, fixed income, market activity. Oh fuck! I'm sure someone probably has an API and can grab that data for me or something like that. I don't know. We all need to throw a put on Bitcoin until Q4. Yeah. Wait for it to recover though. I think it's gonna bounce. It's probably gonna bounce towards 80, and then do it again. Yeah, it's probably gonna bounce. That's what I think. It's gonna look like it's gonna crash when it goes towards 50. It might hit below 50 or just like somewhere around 50K. People are just gonna be freaking out, and that's the time I bounce off of that and go back towards 80, and then from 80 it'll go down to 20 to 30 or something K. That's how it's gonna be. Yeah, have to wait for that Fed chair though. Fed chair guy. All right, dudes. That's good enough for today. I don't know if anything will happen before Friday. I doubt I need to say anything before then. If we have a secret stream, remember, subscribe to Give Crack to Me. Okay, GIVECRACK2, the number 2, ME on Kick, YouTube. I'll only stream the secret streams there. I can play this copyright stuff, freely over there because I don't care about copyright on those channels. All right, guys. Peace. Good night.